What is liquidity and how to apply it to your trading plan? Hello everyone, welcome back to Smart Money Source. To start with, you have to know that for every buyer there is always a seller. Picture this, imagine that we are on this current price action on this chart, and imagine how many traders there are trading all these moves, these swings, highs and lows. There are a lot of traders with different points of view, seeing different things. But what do these traders have in common? The common ground of all these traders is that they see the same key level, the same swing highs and lows that they will use as support and resistance. So, imagining that we have these traders here that open longs here, the thing that they have in common is that their stop loss is placed underneath this low. Why this low? Because this low was a deep swing low where they see as support because price is trying to go higher from here, and they see the possibility of continuing this uptrend in this case. So below this low there are going to be stop losses. The same thing happened with these traders that see price pushing higher, breaking this high, seeing how this past quote-unquote resistance turns support and opening buys here. Once they see this engulfing candle to the upside, they will probably be placing the stop loss below this low. Same happens here. Once price breaks below, they will see this as a retracement and they will open short and placing the stop loss below key levels such as this one and this one right here. So basically, stop losses are orders. Why? Because if you are in a long position, the counterparty to close that position is a short, whether you take a profit or you hit your stop loss. So imagine that all the buyers or people who is longing at these levels, they will be placing the stop losses below this low. These stop losses means that there are going to be a lot of sell stops because the counterparty of a long is a sell stop. Okay, so what happens? Below this low, we know there are going to be sell stops from all these traders who are seeing this market structure and trying to long it, placing the stop loss below here. The same happens for those traders who are shorting when price is going lower, and they can either short from this sharp move or short on this retracement, and they will be all placing the stop loss above this level because they see this as the last resistance where price traded from. Okay, so what we can say is that we have two types of liquidity. One type is the buy side liquidity, which are the buy stops above each one of these swing highs, and the sell side liquidity, which are the sell stops below each one of these lows. How does this help us in our analysis? Well, if we understand smart money, you know that the big issue with smart money is that they have so much money that they cannot trade like we do. They cannot open a trade here with a stop loss and that's it. They need to accumulate orders over a long period of time. And during this accumulation, they will manipulate price. They will stop hunt highs and lows, taking out every early buyer and early seller, or inducing sellers when they are going to go higher, or inducing buyers when they are going to go lower. And the reason they do this is because they need to capture as much liquidity or orders as possible. Okay? So they will move price where the liquidity is, and they will manipulate the market sentiment and then reverse. So the idea of knowing this, which are some key and important things about liquidity, is to frame or build a liquidity grid where we will play with, okay? As we want to trade as smart money, we don't want to be the one that gets stopped. We try to analyze what is smart money seeking for, what is the liquidity that has been taken and where is the next pool of liquidity. Every time price hits the buy side liquidity, so every time the buy side liquidity gets taken, there is always a sell side liquidity that smart money will dispose the shorts, in this case, that they opened on that level. So if we consider this to be a daily swing and this one a daily swing, after this daily high was taken out and all the buy stops were triggered and accumulated by smart money, where is the next logical pool of liquidity on the daily chart where smart money will have enough liquidity or sell stop to start closing in profit all these shorts below here, because this was the last swing low. So they go down here, they trigger all the sell stop or stop losses that were down here, and then what happens? Where is the next pool of liquidity? where price has enough orders to dispose these new shorts that smart money accumulated. What do we have here? Another daily swing high with a high here containing a lot of buy stops. Price goes up, takes that buy stop out, and then reverse. So when will this happen? Well, of course, this will depend on where are we looking at the market. If we are looking at a consolidation market, it will be different from a trending market. On every trending market, every time we see a swing high, we see price building higher highs and higher lows, price will always have what? A target. Why price is trending? Because they like to trend and that's it? No, because they probably accumulated long orders at some point here and they are looking to dispose those orders on a key level where we know they are going to be buy side liquidity. Let's say we have an equal high, and I will talk about this right now, but let's say there is an equal high. Price will continue being on an uptrend till that equal high is taken out, where they will start distributing probably or reaccumulating if there is a higher target that needs to be met on a higher time frame, for example. Okay, so every time price, like I mentioned on the previous video, every time price make a higher low, they are accumulating orders, accumulating till they hit that target. Once that target is hit, now the liquidity is on the sell side because this was buy side. Probably after, if the trend wishes to continue higher, there will be a likely chance that these lows that are in lower time frame, let's say this is a daily swing high and this is a daily swing low and this is a 1 hour trend, all this low will contain what? Sell stop underneath them. So price will likely going to attack those sell stops, accumulate orders because those who are buying here, thinking of this trend, are placing a stop loss below each one of these lows, and price will reverse if it wanted to go higher in the first place. Also, below each high and low, there are not only going to be stop losses, but of course people who are trading the breakout, or people who, or smart money, for example, banks, institutions, hedge funds, who are edging. They are on longs here, for example, and when price hits here, they will open shorts to edge this position. We don't know that. The only thing we know is that there is going to be liquidity. So how to build a liquidity grid or a liquidity map? What I like to do is start off with the monthly. I'm going to explain a simple way of doing it. We start with the monthly chart. We are currently on this monthly candle right here. We can mark the previous month high here, previous month high. We can mark down the previous month low as well, because we know that the liquidity on higher time frame, on the higher time frame swing points, is going to be bigger as well. That's also important. The higher the time frame, the more liquidity there is going to be. Previous month low, let's go to a weekly now. We have the previous week high here and the previous week low. Now let's go to the daily chart and we can mark up the previous day high and the previous day low as well. So by doing this, we are building a story of what price is doing in regard of these daily, monthly, and weekly liquidity levels, previous daily low. These are not only the liquidity pools where smart money is seeking liquidity to build their cost of accumulating order for the next big move. Also, every time we see a double top or triple top, it doesn't matter how many tops there are, as long as we see equal highs being formed or equal lows. You might have heard this, but these, of course, are built in order to accumulate orders or buy stops below these equal highs or sell stops below these equal lows. Actually, these are not equal. Of course, I was referring to equal lows like this. So, other point of liquidity will be a trend line. Every time we see a trend line being formed, where price is perfectly bouncing off a key level, do you think smart money is going to be buying off this trend line because there is a quote-unquote trend line? No. This is smart money building the bullish sentiment for people or traders to start buying and buying here. And where are these traders going to be placing the stop loss? Below each one of these lows. So we know that at one point, price is going to go after the sell side liquidity. How do we know that? When there is enough bullish sentiment, let's say a bullish engulfing candle like this, taking out an all high here, for example, or any sort of manipulation that we can picture here on this hypothetical situation. So once that is happening, once the buy side liquidity is taken, or once everyone is buying, what is smart money doing? They are selling. So we will probably see a down move to the downside, taking out the sell side liquidity. Okay. So again, once the buy side liquidity is taken, smart money is going after the sell side liquidity. Once the sell side liquidity is taken, smart money is going to go after the buy side liquidity. How can we add this to our trading plan? Of course, each one of you are going to have different views about the market, but the main thing is that if we are on a bullish market, okay, and we are doing consecutive higher highs and higher lows, for example, in this case, every time we make a higher high, price is going to do what? Do a retracement. And this retracement, what is the objective of this retracement? Why there is a retracement? Because smart money wants to buy cheaper at the discount level, and also they want to capture sell side liquidity. So for example, if we check these levels, we can say that we are inside of this range from this low to this high. If we see this very closely, we can check that these are relatively equal highs here. We know that people is seeing this as resistance, so this will contain a lot of buy stops. So once they build a bearish sentiment to the downside and everyone starts selling off of this quote-unquote so-called resistance level, smart money is going to be accumulating those sellings, those shorts open, because smart money is manipulating the sentiment, and they will be opening longs to push price higher to take out all this liquidity. So how does smart money sees all this? They see, okay, we have liquidity here. Of course, we cannot disregard the fact that we have liquidity below this low, but we see a bullish trend. Maybe the objective of this bullish trend is this high here, for example, okay? Or this void that we see here, that I will talk about this on another video. But let's say we have more reasons for price to continue going higher. They see this current trend, this current range from this low to this high. Discount level is below 50%, ideally below 50%, ideally of course lower, because we have here an order block that we are going to talk in depth about this in the next video. But the fact is, what you need to know is that they will be buying below 50%, and if we are on a downtrend, they will be selling above 50%. So if price continues going lower here, and we have a beautiful engulfing candle taking out this low as well, what do you think most people will think? That we have a broken support turned to resistance, and they will be probably selling on the retest here to go lower, or breakout traders will see the break of this low as a potential selling opportunity, and they will be selling on this move. Either way, what we need to know is that when street money or retailers are selling, smart money is doing the opposite, it's buying. So probably if we have enough confirmation down here to take a trade after this retracement happens, okay, we know that where is this next possible uptrend going to end up? Will probably the objective of this potential new uptrend will be above these equal highs. Why? Because if they accumulate orders below daily levels, they need a daily liquidity pool to dispose those orders to start either distributing or reaccumulating orders. So if we have a bullish market structure bias, okay, we can use this liquidity grid or liquidity pool to start trading with, and knowing that every time we have a buy side liquidity being taken, depending on the market structure of that current trend, we can anticipate a move to the downside to take out the sell side liquidity. So how can we know the direction of any given move? As I explained on my previous video that you can check on the link below, every time we have a break of market structure, we assume that price wants to go higher. Why? Because price is trying to trade at higher prices. So the break on market structure is going to give us the direction to where we should be looking at. If we have daily, or not daily, sorry, if we have a target for this up move, liquidity target, I mean an all low or an all high, equal highs, or whatever you see here, then we know that there is price is likely to come back down here. If smart money accumulated, then price should continue going higher, and we will be looking to buy at a discount level of this range, and ideally below equal lows if there are inside of this trend. Let's say inside of this trend we have another lower time frame uptrend, and inside of this uptrend we have equal highs like that. Then we know this equal high will contain sell side liquidity. So by knowing this, we are anticipating that if we have sell side liquidity, smart money is likely to take out the liquidity to induce new sellers into the market and absorb those shorts into longs to go higher again. Okay. So the liquidity always act like magnet. I always used to like to use the magnet icon here because it helps you frame what smart money is likely to do. We have a magnet here because we have a triple high here or triple bottom, equal highs. We have a magnet down here. You can see here what happens. We have this high and this low on the daily chart. The last swing low was this one right here on this uptrend, and the last swing high on this bigger uptrend was up here. Price took that liquidity out, the buy stops above this level just by a bit, and then where was the next liquidity pool? Below this low. Price, this liquidity pool acted like a magnet. If you look here, smart money accumulated here because we have a consolidation level where we had manipulations. So they didn't allow price to go underneath their own long orders, and price continues going higher. Where is it continue? Where is the target of this next up move? If the sell side liquidity has been taken, the next pool of liquidity will be on the swing. And you can see our price goes just a little bit above that high and takes out as many stop losses as possible or buy stops above this level. Okay, so this move down here was a stop hand. If this was a stop hand and smart money accumulated orders here, that means that they have long orders open here on this candle. And there is a likelihood that price will bounce off of this candle on lower time frame structures, and then either continue going higher because we are on an uptrend, or respects this other stop hand because we are on a consolidation period, and on consolidation again, smart money is going to manipulate over and over and over again. As examples, I'm going to show you some of the trades I sent yesterday to show you how I analyzed and saw the opportunities on USD CAD. This is the Slack channel where I send trade ideas, GBP and NCD, and Euro USD that is somewhere around here. Okay. So as you can see, I sent these trades out: a buy on USD CAD, a buy on GBP NCD. If you want, I mean, for some people it might be necessary, check the date here where I sent it was yesterday, and also as well sell on Euro USD. So let's break down some of these trades. First, let's start off with USD CAD. If we take a look on the daily chart, what happened yesterday is that price took out the sell side liquidity below this low here. You can see if we look at the weekly chart, we had this weekly low that with this one created a fake double bottom, okay, equal lows. We know that below this level there are going to be sell stops. So yesterday when I saw price coming down here, I say to myself, okay, the sell side liquidity has been taken. If I see any reason of why price could reverse to make either a lower high or a higher high break in the structure, then I will take a buy. So if we go to a 50-minute chart, if you guys know anything about Wyckoff, if you don't, I will be explaining that in other videos. But you can see that the old low, the old swing low was this one, was taken down. We have massive bearish sentiment here. Look at this massive candle here. What do you think retailers are going to be doing here? They're going to be selling, 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 and selling. Okay. So what happened? Price was creating a range. You can see here we have equal lows. So these equal lows were generating the expectancy of going higher. And here, what do we have? This move up was a cookie. This is the cookie that smart money gives to retailers to make them think that price is going to go higher from a key level that they see as support, in this case equal lows. You can see how bullish this candle look, engulfing candles going higher, breaking several points of structure if we look here to the left. But we as smart money traders, we know that this isn't over yet because we have equal lows. So after that engulfing move, price starts retracing, making it look like this is a normal retracement and price is going higher. And what are traders doing? Buying, buying, buying. Where are they placing stop loss? Below these lows. So price made a sharp move to the downside and then bounced to the upside one more time. If we look at the lower time frame, after this move to the downside happened, price, instead of continuing going lower, it quickly reversed and broke the structure to the upside. So this break of market structure to the upside here is indicating that this move down was only to capture the sell side liquidity. So now that they are accumulated longs down here, where do they have enough liquidity to drive price to? Up here on these equal highs, and especially on this massive void and these all highs here. So my idea was to buy down here. The original idea was missed by 1.4 pips the entry, which sucks, but I market execute and it worked perfectly, and this trade ended up being 9 RRs more or less. So the next trade I sent out was a GBP NCD buy here. We can quickly go over this one. We have a sharp move to the downside. You can see a price is coming from taking out the previous monthly high, which was this one. Okay, so basically the liquidity that was above this level is now gone. What do we have here? We have this fake trend line where the bullish sentiment is being built, and you can see that the last push up with big engulfing candles generating the expectancy of going higher, taking out that all high. The breakout traders get excited, they buy. Retailers are going to be buying off of this trend line, and the reality is that all the stop losses that are below each one of these lows are going to be taken down. So price sold off, took out all the sell side liquidity, and when price was hitting a level, which is this move, where smart money previously accumulated orders, I knew that there was probably going to be an up move coming. So I was looking at this very carefully. We can see we have a series of down moves, then we have a break to the upside. If you carefully see this structure, we can see that this was a Wyckoff accumulation. So price broke the structure, sign of strength, came back down, retest. I was seeing how we had equal lows here that were taken out, and price one more time broke the structure to the upside. So now that we saw this move down, grabbing liquidity on the sell side and price going higher, I immediately knew that smart money was accumulated indeed, and they wanted to drive price even higher. So after seeing this break of market structure, I saw a key level down here to take a trade, and I sent it out. As you can see, the original entry hit perfectly, and price made an initial push to the upside, making 2.53 RR, which is not amazing. But if we go to lower time frame, I can show you how I refined this level and actually made a 14 RR trade. As you can see, we have a Wyckoff accumulation schematic, selling climax, basically people excited to sell after this massive drop. They start selling, and what is being built here? A super fake trend line. I like to call it that way because it reminds me of how retailers, they get triggered or they get tricked by smart money. So super fake trend line where retailers are looking to sell from. And what happened? They allow, and what is this? A cookie. This is the cookie that retailers see to sell from. Okay, so when price starts retracing, where are they placing stop loss? Above these highs. What does price do? Boom, they take out all those highs. So now, if you don't know Wyckoff, you might get confused here. This may look as a break of market structure, but it's only a stop hand. What is happening here? We have equal highs being formed. Now there are some people that still want to sell this, and they say, okay, you want to sell this? Great, let's sell this. So the people who is selling down here, they are placing a stop loss above this level. The people who is buying here, they are placing a stop loss below this level. And what happens? We have liquidity below this low and liquidity out this high here. Price takes out that liquidity, which is the spring of this Wyckoff accumulation, and here we have another push up, creating what? Another equal high. Now we have three highs, creating this fake double top or fake trend line here. And who is selling? If retailers are seeing that price broke again the structure to the downside and is coming back into a resistance area, they will be selling again. So this is another cookie that smart money gives to the retailers to make them think that price is going lower. And what actually ends up happening is that price reverse and continues going higher to take everyone's out. So based on this spring and on a refined level on lower time frame, I managed to get this entry right here that you can see. My take profit 1 was up here, take profit 2 up here, and I end up hitting a nice 15 RR trades. And the final trade I took to show you how the liquidity works was a USD scalp that I end up hitting 3.5 RRs. Let's go to Euro USD. This one right here. You can see on lower time frame we had a Wyckoff distribution schematic, and this Wyckoff distribution schematic happened where? It's happening after price took the previous day's high, which was this high here. So after taking that buy side liquidity, where is the next pool of liquidity? On the sell side. So I spotted this Wyckoff schematic, I waited for a break of market structure to the downside. When price returned to its level, I was in a little bit of drawdown, but that's okay because I had my stop loss well placed, and then price continued going lower. In this case, failed to go lower, but that's okay. I was aiming at this low only, which is 3.5 RR for a quick scalp. Price created equal lows here, but then continue going higher. We had another reaccumulation and price made another impulse to go and grab more liquidity to the buy side. But you can see that after attacking the previous day high, we have a reason of why price wanted to go higher, where smart money was stop hunting around the buy side liquidity over and over again. You can see that each high that is formed is taken out, taken out, taken out. And what do we see here? A super fake trend line again. This is seen as support by retailers. So what are they going to be doing here? Buying, and smart money selling. Okay, so I hope that you enjoyed this video. If you did, I would appreciate if you subscribe and like this one and share to the traders who want to help the most with this free knowledge. I hope you are doing well, and see you guys in the next video where I'm going to be explaining even more liquidity concepts. Thanks for watching.